Stop. These are the 5 most important mistakes that I've seen people make when buying a house. My name is Wayne Turner. I've been in the real estate business for 25 years. Yes, a little gray in the beard. Closed over 4,000 houses, over $500 million in real estate, but enough about me. That's regardless. This is about you. So I want you to be informed and hear. So let's get right to it. The first thing, and first and foremost, is knowing your credit score, knowing your FICO score. And so people are like, well, what is FICO? Well, it stands for Fair Isaac Corporation. Don't ask me. I don't know any more than that. I just know that I use personally myfico.com, and they have 3 different tiers, and you can go there and look at your credit score. So your credit score needs to be 640. That should be your goal. So that's the biggest thing we see is people don't literally get their credit score. Maybe they're a little afraid. They just don't want to hear the negative is what I found when talking with home buyers. But you want to get that out of the way. And not necessarily having to talk with a lender or go to a lender, go to a bank, but do your own paperwork, due diligence, where you can pull your credit, make sure you have a 640 credit score, and then look and see what's on your credit report, because you'd be surprised. Most people have something on there that's not even theirs, and that way you can contest that right on that MyFICO website, and they'll completely take that off. Now, the second one, and I think is pretty important, is not getting a home inspection. And we're going to talk about the 5, and I'm going to come at you real quick so it doesn't waste a whole lot of your time. I think 5, personally, the 5th one is a little bit more important than all of them, just because it keeps you from losing the house. So, number 2 is not getting a home inspection, not doing a home inspection. I've personally bought houses where I've not done home inspections and wish I did, and I've seen a lot of people not do home inspections. And you're probably watching this and thinking, who in the world would buy a house and not get a home inspection? You'd be surprised. Some people do. The bank doesn't require a home inspection. So a lot of people think, well, isn't the bank or the mortgage company? And keep in mind as you're watching this is pretty much meant to be if you're getting a loan to purchase a house. It's really and it's not necessarily your first house. It's just buying a house, right? So the deal is the bank will send out an appraiser, but all the appraiser is going to do, and it doesn't matter if it's an FHA loan, if it's a government-backed loan, it really doesn't matter. They're going to send out an appraiser to appraise the property. That way they don't overloan on that property. They want to make sure that they're not giving you more money than the property's actually worth, but they don't do anything in terms of inspecting the property, if you will. Like if it's something major and they'll see it, they'll flag it, they'll raise it, if it's something like big broken windows and things like that. But for the most part, if the house is in pretty much move-in condition, they're only going to appraise it. Now, home inspector, they're going to go through the house. They're going to spend 3 hours. It'll run you anywhere from $300 to $400 on the average house. And they'll spend 3.5 to 4 hours on the home and give you a full report, typically around 90 pages. And at that point, you can go back to the homeowner and say, look, I still want to purchase your house. I still want to buy the house, but there's 9 things that need to be corrected. And there's other videos out there that I've made on that, but there's typically 9, 10, 12, 20. And at that point, you can make the decision, do I want to move forward with the purchase of this house or not? Do I want to move forward with the purchase of this house as long as the seller's willing to fix those items? And at that point, that's when you get with your realtor and you speak with them and say, look, I looked at the report and these are the items that I want fixed, repaired, or replaced before I go to closing. By not doing that, it puts a little bit more fear when you lay your head on the pillow at night, that very first night you're in that home, and next thing you know, you're like, I hope the water heater's okay, I hope the central heat and air is okay, and I hope the plumbing's okay. Getting a home inspection will ensure that it gives you peace of mind, which leads me into the third thing that you can do. And a lot of people don't realize this, is that every single home that you purchase, you can get a home warranty on the house. Now, for our clients, we always ask the seller to pay for the warranty, and 99.9% of the time they have no problem doing it because the home warranties run at a cost anywhere from $500 to $700. What's really cool about the home warranty as a buyer is it covers your house for 1 full year. And then after that year, it's renewable. So you can pay for that renew of that home warranty. I mean, personally, rental properties, investment properties, my personal home, I have a home warranty. And here's the reason why. Because if something breaks, all I have to do at that point is log onto a website, tell them what's wrong. They will immediately call and or email me and tell me they're going to send out a provider. And at that point, the HVAC guy will call me, or the water heater, or whatever's not working, an oven that's broken, an aisle, whatever it may be. Here's what's really cool. They come out, fix it. Usually it's fixed within 48 hours, and all you pay is a service call fee, which runs $75. So you have a $75 service call fee. So if you purchase a house and you close on that house, and all of a sudden your air quits working, your central heat and air quits working, you know, it's cold outside, and all of a sudden you're freezing, your heater quits working, then you can dial a 1-800 number, log onto a website, they'll send out somebody, and it's no cost to you because you had the seller pay for that for you, your benefit. Now, the fourth thing that, and this can be kind of controversial because some people are like, well, it really just depends on whether or not you have the cash or not have the cash, and that's closing cost. So closing cost is where you're paying the lender an upfront fee. You're also paying the mortgage lender to prepare your taxes, escrows, all of that money's basically to get your mortgage and everything going, because you'll have taxes, you'll have private mortgage insurance if you're not putting down 20% on the property, which, by the way, you can purchase a house for literally no money out of pocket through an RD loan process. RD is Rural Development, USDA. And you'll have closing costs with all of these loans. Doesn't matter. But what I always suggest people, and even when I purchase properties myself, is have the seller pay your closing cost. By having the seller pay your closing cost, and closing costs typically run 3 to 3.5% of your loan amount. So if you just do a basic FHA loan and you're putting down just 3.5% on a say a $200,000 house, then you're going to have closing costs of around $7,000. So instead of having to bring $14,000 to close, you're now buying an FHA. You're now buying a home, getting an FHA loan. You're going to pay for your own inspection, and you're going to have the seller pay closing cost of, say, around $7,000. So now instead of having to have $14,000, you're only having to have $7,000 to purchase that house. And at the end of the day, some people say, well, aren't you essentially financing that closing cost or rolling it into your mortgage, rolling it into your loan? Yes and no, but you got to consider, especially if it's your first-time home, the average first-time home buyer only stays in their house about 6 years. So that $7,000 stretched out over 72 or 84 months, 7 or 8 years, it will take you longer to make that money back. So a lot of people, like me personally, cash is king. I'd rather have the cash in my pocket as long as the bank has qualified me to, and I know that I'm comfortable with paying the payment, and that payment I can afford, okay? Now, the fifth one, and this is the final one, and I think I see it happen so often, and I know people really miss out on a great home property that they can move in, buy, and make it their own, and that is, and I explain this to our agents that work with us here at my company, is share with the buyer not to get caught up too much in the negotiation. And here's the reason why. Because we never, as consumers, hardly negotiate for anything. We go to Walmart, Lowe's, Home Depot, we buy items, we buy them online. Not until we go buy a really large, big-ticket item are we negotiating. Or unless you're going to a yard sale and somebody's asking for $1.50, and you say, well, you take $1, and be like, I'll take $1.25, and then done, you did a deal. Which is fun, by the way. If you want to get in sales, go yard selling. The next thing, and I think it's really important, is big-ticket items like motorhomes, motorcycles, boats, campers, RVs, all of that stuff. People negotiate a little bit with that. Houses, But what happens is they get caught up in the big picture of the big money. So let's just say you found a house that you really like and it's listed for $300,000. So we suggest, hey, let's just make an offer of $290,000, have them pay $5,000 in closing cost, or $295,000, $5,000 in closing cost. We'll get them to pay for your $600 warranty. Leave the refrigerator and the lawnmower that's out back, whatever it may be. What happens at that point is now the seller's going to come back and they're going to give us a counter offer, and we're going to share that with you. And you're going to look at Well, it was listed for 300. We offered 290. That's $10,000. You have to look at it this way. It's a must that you look at it this way. How much is it going to be on your payment? Because that $5,000, yeah, it's $5,000 to the seller or $10,000 to the seller, because it's that much money they are not going to be receiving at the closing of their house, selling it to you. But as the buyer of the property, when you're buying the property, $5,000, $7,000, $8,000. And look, you can go to Google right now and Google mortgage calculator. You can literally drop in the interest rates, which are around 3.25% right now today in 2021. Or you look at the payment on that on $5,000, $7,000, $8,000, $10,000, and it's literally just $18, $16 a month. The point I'm trying to make is, don't get so much caught up in the $5,000 and $10,000 and $15,000 in price if you really like the house, because it's an emotional purchase, just like it's an emotional sale when you're selling your home. But I find that so many people miss out on a great property, a good home that they can bring home babies and take prom pictures and have barbecues in the backyard and let the kids and the dogs run and play, all because of maybe $7,000. And they're looking at $7,000, and it's not even going to cost them that. It's going to be a very small percentage of that on your down payment. And most importantly, it may only be $10 or $12 or $15 a month. And so when you take this $7,000, $8,000 and divide the $15 or $20 a month into that, it will take you 15 years to basically recoup the money. So that's kind of my thing. Those are the top 5. So to sum it up, we've got check your score, check your FICO score, know what your score is, right? The second one is do a home inspection. They call it your due diligence. You have that time frame in a contract to do your due diligence. You typically have 10 to 14 days to cancel the contract because the sun is shining outside. Doesn't really matter, and you don't have to give a reason. But do your due diligence if you really want the house to know that, okay, this is a house that I like. There's a few issues with this house. And listen, you got to know this. I had this happen to me. I've had it happen to clients, and I've had it happen to myself personally. If the house is brand new, get it inspected. Still get it inspected, because it doesn't matter who the contractor is. It doesn't matter if they're one of the largest contractors in the country, your city, your state, your town, or if it's just a guy that's building 10 or 12, a guy or gal that's building 10 or 12 houses a year. What you want to do is have a third party, a person to come in and inspect the property. Quick story of mine is I had a house built. The shower was not connected to the main sewer line. So for 6 months, every time I was taking a shower, the water was literally just going into the crawl space of the house, which can cause mold and all that other stuff. So you get what I'm saying. And then thirdly, you want to get a home warranty. So if you can purchase a warranty, have the seller purchase a warranty. I know in our contracts, we always write it in that the seller will pay for the warranty. And then, of course, that's renewable. The fourth is paying closing costs. You can pay your own closing cost if you want, but I always just recommend, my personal opinion is have the seller pay closing cost. That way it's less money down and you keep money in your pocket, because it's inevitable. You're going to want things when you purchase the property. You're going to want to change carpet, paint. You may want to change countertops. You may want to, if it's your first home, you may want to go to Lowe's or Home Depot and buy shovels and rakes and that sort of thing. And at the end of the day, after you close on that house, you don't want to deplete all your funds. And the best way to not deplete all your funds is just have the seller pay your closing costs. That way you can buy a $200,000 house and you basically only need $7,000 to buy the house. So, and then getting caught up in the whole negotiation of the process in buying the house. Look at your payment. And you can do that every single time. You know, every house that you look at, just look at what's your payment going to be. You know, what are my taxes? Taxes usually run about 1 to 1.25%, depending on where you're located in the country. We're in Louisiana. It's about 1.25% of the sales price. Same way with homeowners insurance. And then you have private mortgage insurance. But you can do all that by simply going to google.com and typing that in, and it will literally show you within a second what your mortgage payment's going to be. So I hope this is helpful. Give us a shout out if you ever have any questions, need anything, or you're just looking to buy a house somewhere around the country. We've got a great network of once again, been in the real estate business for a couple of decades now. And if you need somebody, regardless of where you're located in your market, take good care of you and represent your interest. Once again, I'm Wayne Turner, Turner Real Estate Group. We'll see you.